Okay, welcome to the course. The course is, as I told you, ACC 1340 Financial Accounting, which is offered by the Department of Accounting. The first, what we are going to do is we are going to introduce the course. We call it course introduction. We'll see what it is. Basically, it's a 45 contact hours. We will have almost 13 to 15 lectures. It's a compulsory one, as you know. All students in the Faculty of Management Studies, who are in common program, should undertake this, should follow this course offered by the Department of Accounting. And we have a panel of lecturers like a cricket team. This time we have 11 resource persons, even 11 lecturers. Mr. PDC Udeshanta is the course coordinator this time. And we have the one senior professor and myself and Professor Anil, Dr. Kingsley Karunaratne, Chaturika Senaviratne, Doctor, and Mr. Rangaji Veherat and Mr. Sandaruwan, and Mrs. Amali Hevage and Dumindu Janit. Recently recruited two staff members and Gayantha. Those two are very recently be recruited. So they also join with us to deliver this course. With regard to the course, I think you are familiar with everything, whatever the information like a notice board, whatever the information you need will be appeared on LMS, material, tutorial, assignment, quizzes, notices, whatever the things, lecture material, reading material, and recorded lectures will be really appeared our notice board, that is learning management system. You are familiar with this, and you have to register. You know how to register. We are already registered, no need of talking about that. Username and the password, CPN number is the username and the password is the registration number. Then, of course, for this course, as course coordinator informed that the advanced level accounting, knowledge, we assume that we continue it, accounting. So thereby A-level accounting subject is essential to follow this course. I think that's okay. Then the course coverage, we have 12 items or 12 areas. Financial accounting is not, we can't cover under 12 areas, but we have selected much more important areas under financial accounting. Then we have next year, advanced financial accounting, financial reporting, corporate financial accounting. Likewise, we have really developed the course in such a way, step by step, but for the common program, we thought of, we have decided, or we have designed, we have selected these 12 courses. We believe that those courses are commonly important for any undergraduates who are following management related courses. That's why we have selected these 12 areas. Just to read it, I think, of course, you can read overview of financial accounting. We are basically discussing what financial accounting is, brief introduction to the financial accounting. And there is a conceptual framework of financial reporting. We will be discussing the conceptual framework of financial reporting in our second lecture. Preparation of presentation of financial statement as per the accounting standards, and fair value accounting, which is much more important in financial accounting, financial reporting, fair value accounting. Accounting for assets, we will be discussing different kind of assets here as a common way. Accounting for property, plant, equipment, one particular specific assets, PPE. Accounting for investment property, IP, another kind of assets. Then we are discussing accounting for borrowing cost with you all. Borrowing cost is really a debt finance cost, interest and other related finance cost, borrowing cost. Then the accounting for impairment assets like similar depreciation due to environmental and other factors, your certain assets will get impaired. So we will be discussing that part with you. And also accounting for liabilities, accounting for leases, kind of financing method, and accounting for revenue. So those are the areas what we are going to discuss. Then, of course, tutorial questions are available in the course manual chapters. So tutorial question, there will be a separate lecture or the tutorial classes. I think each Friday, if you look at the timetable, if I'm correct, Friday, tutorial class are not 2 days you have tutorials for the relevant groups. Tutorial questions are available at the end of the each chapter manual. Hope that you all receive the manual. If not, chapter 1 and chapter 2, we are uploading the chapter wise material also. We know that some of the students yet not received the course manual, and they were unable to get it because due to this COVID pandemic situation. So thereby we are uploading chapter wise also. You can get it from the LMS. Tutorial questions are required to complete prior to the tutorial session. So better to do complete almost there may be maximum 5 questions. I hope that before coming to the tutorial, better to work out, better to try, better to understand those tutorial. The work completed in online quiz will assist you in assisting your tutorial activities. Also, the quiz will support it to do your tutorials, and please have the course manual and your answers for tutorial questions to the tutorial session to actively participate in the tutorial. So basically what we are trying to do is before tutorial classes, you need to complete those tutorial questions, but tutorial lessons we will start as per the coordinator 3rd week, not the 1st week, not this week, not next week. The 3rd week will be we are starting the tutorial classes. Then assessment with regard to the course, as usual, we have 80% marks for the end examination, that is final examination, and 20 marks online quizzes, 5 quizzes. These quizzes will be announced in advance, and you have to answer, I think within 1 week, you have to answer the quizzes. Okay, 20 marks, 20%. Online quizzes, 5 quizzes announced through LMS, of course, yes, can answer at any time within a week. As I told you, you have to answer within a week. No excuses for the quizzes. No excuses for the quizzes. So thereby it's a committed assignment. So you have to do it, no alternative, no other alternatives. Then the course policies, of course, we expect you to read reading, information and announcements, also important, academic integrity. So plagiarisms, we are not, loving copying and all that. We expect, your 100% commitment. That is the assumption in this course. And classroom discipline. I think no need to explain those classroom disciplines. This is A3, A5 class. Okay. Classroom disciplines. I think you are familiar with this. No need of explaining all that. Okay. Then how to succeed? Do up to date preparations. Its preparation is important. Read all relevant chapters. Take notes, do all tutorial questions, understand concept rather than memorizing, revise previous material, and put more effort early in the session. So what is important to complete this course in a successful way? Your active involvement with the course. So thereby you need to read the book, read the manual, do some questions, raise some questions yourself, and you have to discuss with your colleagues, students, friends, and write something, have your own notes. So a lot of work need to be, carried out during this course. Of course, this is little bit, a course which involved with calculation. Of course, this course is basically involved with calculations. And our expectations, all lecturers, lectures and attend all lectures and tutorials. We encourage you to attend, contribute and participate. Feedback, if you don't understand a concept, please let us know by putting a message. Chat box. Please check LMS at least twice a week for updates and for any other information. I think not twice a week, but if you can look at the LMS, at least each and every day, I think that's good. We expect you to at least twice a week to log into the LMS and just go to our subject and see whether are there any new information. It's like a notice board. It's like a notice board. Okay. So this is our Department of Accounting. So we wish you all the best for the course. So that is about course introduction. So what I did was I covered the meaning of the course. I introduced the areas covering. We discussed the assessment method. There are 2 assessments, final exam and the quizzes, 5 quizzes, and we discuss what we are expecting from you, and what we discuss what you have to do in brief. So with that, I would like to conclude the introduction to the course, but we have the other session. Before moving to that, I would like to give you 3 minutes. If you have any question, you can just put them into the chat box before starting the next one. I think it seems that no question. Yes. Anyone? Okay. Shall you move on to the other part? Since there are no questions. Yes, clear, sir. Yes. Okay, good, 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 good. Shall we move on to the next one? It is about the introduction to the course, chapter 1, overview of financial accounting. Basically, we are just introducing. The purpose of this chapter is to give an overall understanding about financial accounting nature and the scope of the subject will be discussed a little bit further under overview of financial accounting. So there are learning outcomes for each and every chapter. You will notice in your manual or the chapter there are learning outcomes. So what we will be doing is, after studying the chapter, you will be able to answer those questions. You will be able to assure, attain, gain, earn the respective understanding, respective knowledge. For example, here explain the meaning of financial accounting at the end of that. Compare and contrast financial accounting, management accounting. Differentiate between general purpose financial statement and special purpose financial statement. Understand regulatory requirements on financial. Just to recap your knowledge, just look at these questions. Accounting is accounting process involved in recording quantifiable economic events, non-quantifiable economic events, both A and B above. So you just read this and just to make you a little bit active. Very simple, very narrow question. Very simple question. I think you will agree with me. The answer is what? If you look at the subject in broader way, I hope that both A and B above will be even certain economic non quantifiable economics we tend to disclose under the financial reporting or financial accounting. So thereby, even though double entry is for quantifiable economic events in monetary terms, but as per the new, as per the accounting standard requirements to provide, faithful representation and relevance, what we do is we tend to we tend to disclose even non-financial, non-quantifiable economic events. So thereby, for me, the both A and B above correct. Next, identify the correct sequence of accounting. I think, so again, this is a simple question. You will see that, okay, identifying, recording, communicating is the answer as you learn. But the answer B is correct based on our existing knowledge. But you may think in different way also. So certain information you may say in accounting we summarize and record and communicate. But when you look at the financial account in the basic, we record the we identify the transaction, then we record and we communicate in terms of reports. That's the answer. But in certain cases, there is a possibility of starting when you study the accounting in advance, second year, maybe third year, fourth year accounting specialization, you may look at the accounting not in this way, but in different way. You might see the accounting not in this way. So thereby, I think you are communicating me. I have seen your answers. Thank you very much. So thereby, basically, that the moment your answer is we accept the answer is B. What I'm trying to say is when you look at the accounting in a broader way, now we have set up this answer so as to match with your existing knowledge, assuming that you are a A-level accounting. But when you study the accounting in a broader sense, we break all these traditional way of looking at accounting. Okay. Anyway, answer is B for the question. What is accounting again? As we you see that process of accounting, process of identifying, measuring, recording, and communicating economic information to permit informed judgment and economic decision by users of the information. You see, this is 1941 definition, which is very much old. And if you look at any definition, there are different ways of looking at. There are different ways of explaining. There are different ways of understanding. There is no one particular way of describing what it is. There is no one particular way of defining a particular concept. Now, if you look at here, they have here the American Accounting Association, AAA means American Accounting Association, has defined accounting based on the process. Based on the process. You can define the accounting based on input, not only the process. And also you can define the accounting based on output. And you can define the accounting from political perspective. You can define the accounting from sociological perspective. You can define the accounting from economic perspective. So thereby, there is no one way of defining what accounting is. So it's up to your, it's up to you. You decide, you describe based on your understanding what the accounting is. But for the time being, for our course, just to deliver these titles or the areas, we think this definition is applicable. That's why we have selected this, the process of accounting. The identifying, measuring, recording, and communicating for delivering purposes. The earlier, you can remember we discussed, we introduced 12 areas. Just to deliver those 11 or 12 areas, we think that process-oriented definition is applicable. That's why we have selected this. So there are other ways of defining account. Just to discuss the process a little bit further, you see the diagram, which is clear. You know, diagrams are much more effective in communicating. When you have 10,000 words and one picture is more worth than 10,000 words, though thereby you know, graphical method, you know, picture method or diagram method will help us to understand whatever the concept, whatever the area, whatever the academic matter. So thereby we have just put a, you know, a diagram for you, identifications, recording. You know, when you record, you can, you know, classify, you know, summarize, and communication, that is you are preparing reports, and once you prepare reports, you know, analyze and interpret for users for decision making. So that is the idea. I think you are familiar with this. But you have to remember, in certain cases, when you look at the manual system, of course, these each task may take place at different intervals. I think you can remember, you basically record the transaction in primary books. You may have discussed the primary books, sales day book, you know, purchase day book, likewise different traditional way of maintaining books, and those are some kind of you know, recording methods, and you identify what are sales, what are debit sales, what are credit sales, what are credit purchases, what are cash transaction. Likewise, then you record, and you at the end of a particular period, the total of these day books you transfer, journalize. This journal entries then you transfer to poster to the ledger account. At the end of the ledger particular period, the particular experts will prepare reports. We call it financial statements in financial accounting, and financial accountings will be used by different users. But when you take kind of, you know, software package, electronic, very high advanced, real-time update software packages, I think certain activities in this diagram will take place, real time, then and there. When you make an invoice, so you record in the respective individual sales account or the particular sales type product wise, and it will update in the sales general ledger, sales account, turnover account. If it is a cash sales, will be debited to the cash account. If it is on some credit, so that will be debited to credit debtors ledger, and also general control account, debtors control account. So simultaneously, and if you need at the end of the day, you may develop a particular financial statement day wise, daily wise, monthly wise, weekly wise. No need to wait until one particular period. But when we prepare communications financial statement manually, it's very difficult to update every day your ledger accounts. You can't see the balances each account in every day because you are maintaining the ledger accounts in a book. So thereby you need to balance the account. But when you have the system or electronic or the automated, I think you can find out the balance, you can analyze, you have the data this way, that way, whatever the way you want, you can arrange the data. So thereby you can prepare different kind of reports. So thereby when you look at this the accounting process under automated system, it is linked with not only the financial accounting but also other accounting matters, maybe management accounting. So you have the information set in the database. So matter of arranging data the way you want by using your IT experts. So you get many reports, many ways. So what I want to communicate to you is that even though there are step 1, step 2, step 3, step 4, certain steps may taken place simultaneously then and there if your system, if your software is more advanced or updated. So with that, I think accounting process is I have completed. But you see that you can consider identification part as the input, this part as the process, recording part as the process, and this part as the output. So thereby in a process, you have the input, you have the process, and you have the output. So the output again may link to the input. In certain cases, that assets, liabilities, equity, those balances in the ledger, you carry forward to the next period. So thereby certain outputs, certain value of assets, liabilities, and equity, of course, you carry forward to the next period. So thereby accounting is a kind of continuous process, and it is much useful if your accounting system, if your total operation of the business organization is automated, so you can generate a useful, relevant set of information which may not link with financial accounting only. So you can expand into other discipline as well. So that's the importance of software system with other software modules, maybe marketing, maybe sales, maybe operations, maybe finance module likewise. Anyway, so that is about accounting process. Recapture your knowledge. What is the role of accounting in a society? recording business transaction, recording and communicating information, calculating profit business entities, analyzing information of the business entities, measure and presentation information. So just, shall I see you ask? Recording business transaction, recording and communication information. What is your answer? D. Okay, good. Thank you. I think yes. Very good. But it seems answer is D. But this is line with your recap your knowledge. That is based on your existing knowledge. But remember that we can the role of the accounting in a society, we can look at from little bit broader perspective, So I hope that just to discuss little bit, just to open your thinking, just to make your eyes open, when you take accounting, the major or the role of accounting is towards the society is to ensure the accountability. Accountability, again, we can discuss from different perspective. So accountability means you are responsible for whatever the things you have undertaken. If you have given a certain kind of authority, you are accountable. So thereby accountability. So the fundamental question is that, a lot of corruptions, lot of manipulation taken place. So those are not the expected role of the society. Just by mere recording and communication information is not enough. It has to be faithful representation, relevance, it's for the sake of the public. So everything is accountable for the public, but I don't take much more time to discuss. Anyway, as per the existing knowledge, and they are expected you to understand or select the answer number 2. Thank you. Again, what is why accounting is important to an organization? To safeguard assets, to obtain funds, to evaluate investment opportunities, to show the performance, all of the above. I think again, yes, we are very good. The answer is B. In multiple choice questions, when there are all of the above, most if the statement is longer, right? If the statement is longer, if there are one statement all of the above, generally answer is all the above. No issue. That is one way of predicting. But here in this case, I think answer is, as you agree, answer is E, because accounting is always safeguard assets, to obtain funds, to evaluate investment opportunities, to show the performance, because it provides information. Accounting is a mechanism, system which provide information. There are certain characteristics. In financial accounting, we use accounting standards and the companies and other regulatory matters and other regulatory requirements to inbuild the quality of accounting information. We know quality is, you can discuss the quality of accounting information from different perspectives, but as per the conceptual framework, if you look at the qualitative characteristics or the quality of accounting information, I think faithful representation and the relevance is the key. So thereby you provide information for users to make a decision. I think answer number E is correct. how does accounting help to stakeholders? Stakeholders means, uh, people who are interested in your organizations. Different organization will have different stakeholders. Now, if you take private limited liability company or the partnership, stakeholders may be limited. Stakeholders may be customers, suppliers, owners, private limited liability company, family business people, owners, and little bit debt providers. The number of stakeholders will be less. But if you look at what do you call, a company listed in the stock exchange, listed company, stakeholders are much more. When you take shareholders, many thousand of shareholders, suppliers, many, customers, much more. Maybe certain companies, multinational companies, all around the world, there are stakeholders. But when you take a family partnership, I think stakeholders may limited to a particular area even. Your customers is only for your area, right? So depending on that nature of the organization, I think stakeholders will vary and complex. When you take the small, simple organization, stakeholders are less and less complex, very, very easy to manage the organization, very easy to satisfy their requirement. But if you take a listed company, there are many stakeholders, so thereby complexity is very high, difficult to manage. So there are different, since there are many stakeholders, accountability is not simple. So thereby there are different mechanisms to manage the stakeholders, like corporate governance, different systems, customer satisfying survey, audit committees, different set of mechanisms are there when you get complexity. But when you take the public sector organization, departments, ministries, water board, electricity board, public sector oriented business, I think stakeholders are much more complex. Even media people can enter into the organization. Even media people really can be considered as stakeholders, and they will have a big impact. They will make a big impact to the society by reporting the matters. That's why most of the cases in this country, we talk about public sector, corruptions, because it's open to everyone. More complexity, more stakeholders. So thereby, when there are more stakeholders, complexity is very high, very difficult to manage the organizations. When you take the public sector, I believe, my opinion is that those are the organizations which are having much more complex stakeholders, very difficult to manage, very difficult to measure the performance, something like that. Anyway, our question is, what does accounting help to stakeholder? How does accounting help to stakeholders? So we'll see your answer. Good. Answer is C. Yeah. Can anyone tell me the answer for the previous question? Previous question, of course, answer is E. Answer is C. Previous question means why accounting is important. For this, what is the answer? Have you put this answer? E. Is it E? Is it? Assist the government to allocate resources to different industries. Assist investors to evaluate investment opportunities. Assist managers to evaluate efficiency and effectiveness of their managerial decisions. Assist editors to verify the accuracy of information provided. Assist general public to evaluate business contribution to the economy. Yeah, I think what is the answer here? We'll see your answer. F. Yes, good. I think yes. F. So this answer is little bit, broader. This question, how does accounting help to stakeholders? There is no one particular, you can write indefinite number of answers here. All of them are correct. All of them are correct. Accounting, we are talking about not financial accounting, we are talking about accounting. So there are whatever the statement you write here to by considering the stakeholders. Now here the stakeholders are government. Here the stakeholder investors. Here the stakeholders are managers. Here the stakeholders are auditor. Here the stakeholders general public. You see, different kind of stakeholders. So thereby, I think all answer is yes. So who are the users of information? So there are different, kind of users. We can categorize internal users and external users. One categorization. Internal users, of course, these people, management group, board of directors, partners, managers, officers, all these are internal, and all these two categories coming under the external. External, internal classification is little bit old, little bit outdated. Internal means those who have access to information, those who have authority to access the financial or the accounting information, called internal. Management group, that is basically the board of directors. If you look at a sole proprietor partnership, partners, the powerful managers and executives, they have the access. But even these managers and officers might have different level of access, but we don't consider the different level of access. But since they are having access to certain amount of information, we call it internal users. But remember, trade union, even though trade unions are internally located in your organization, they are really employees, but we don't consider trade union label as internal. You have to understand that, because in the trade union, there may be managers, there may be executives, we don't know. But we are talking about the trade unions. Trade union is not representing a management team, or they don't have access to all the information, but they have to get the permission from the management. That's why even though they are internal, inside the organization, they don't have the access to internal access to information. So external is whatever the party who are not having access to data information is called external. Of course, investors. Here the investors, you have to remember, investors in the sense of listed companies, the shareholders, the lenders, suppliers, government and regulatory authorities, employees and trade unions, customers, rating agencies, others. All these are external. But we can have external users, different classifications, primary and secondary. Primary and secondary. So when you look at the primary, of course, the fund providers for the organization, debt, equity, capital, these people, and public groups, you consider other parties, you consider as secondary. I think latest classification, if you look at the conceptual framework, what is relevant is the primary and secondary classifications. But earlier conceptual framework, we discuss internal and external. When you study the accounting standards, I don't think internal and external users classification is now relevant. Okay. Classification of the users of information, as I told you, internal, external, based on the access to information. I think I explained it. Ability to take part in decision-making process. Primary, secondary, based on the IASB, International Accounting Standard Board. You know the meaning of IASB, International Accounting Standard Board. When you study whatever the management, you should be in a position to, understand whatever the abbreviations. Even though there are abbreviations, you should know IASB, International Accounting Standard Board. Conceptual, so it's the latest one. So that's why primary, secondary is important. So thereby, when you say primary, secondary, management group is out here. This group is out. They consider only these two parts. I think I have discussed that. Then we discuss the accounting. We divide the accounting for our teaching purpose, not for anything else. For this course purpose, we discuss the subject accounting into financial accounting and management accounting. Accounting can be categorized in different ways. Don't worry. Categorization, there are many ways of categorization. Like, students can be categorized male, female. That's one categorization. The same student we can categorize in different ways. According to provinces, according to the schooling, according to the number of attempts who made to enter into the university, first time or second time or third time. We can categorize students, same students. So the categorization depends on the purpose. Categorization depends on the purpose. So thereby, to teach financial accounting subject, what we have done is we are trying to categorize accounting into two parts: financial accounting and management accounting. Remember, each categorization have its own limitation. Male, female categorization, maybe for some, gender related issues. But if you are going to provide a meal or the party or the lunch for our students, we are not categorizing them as, male and female. Male and female categorization is own limitation. So thereby we ask, you like, chicken, you like fish, something like that, vegetarian, non-vegetarian classification is relevant. So always classification relevant to the purpose. That's you have to remember. Financial accounting and management accounting. I think this is both external and internal stakeholders. Internal stakeholders, managers. The management accounting is for basically designed for the management. That's the traditional way of looking at. Financial accounting is basically designed for the, primary fund providers, investors, lenders, suppliers, creditors, and also including public. So that's kind of thing. That's that. I think you are familiar with this structure even. Then we have differences between financial accounting and management accounting. Just to convince, just to communicate to you that there is no, here we have select 1, 2, 3, 4, 5 variables. But when you try to understand differences, or the, when you try to differentiate any two concepts, there is no particular number of variables. You can list n number of variables, not only the 5, you may list 10, you may list 12, you may list 100, depending on your understanding. But just to discuss in this class, we have selected 5 variables, and we will see the just take few minutes and just to list out all these differences. The method, when you look at this thing, you may have your own wording, you may have your own way of thinking. Don't worry, there's no one specific answer for this kind of comparison. Comparison always depends on your understanding. So thereby, more, when you understand more, your answer is more complete, more excellence. When you answer less, and when you have less understanding, your answer is less, less quality or low quality. So thereby, what is important is to, when you compare anything, Your understanding will help you to differentiate the concepts between these two. Okay, if your answer is okay, then yeah, I think tell me first question answer. I'll come back to that one later on at the end of this thing. But one question I think it's important. So, but when we take a sole proprietorship, we consider the owner as an internal entity. What is that? Yeah. So when you consider uh, sole proprietor, so owner is coming here, internal user. There's no argument. I think I understood that way. You can put the owner, but the thing is that when you take sole proprietorship and partnership, you know that uh, the preparation of financial statements are not compulsory. So thereby, you know, classification we can classify, but if you look at logically, the classification of internal and external or the primary and secondary not relevant, because so those organizations are no need of preparing general purpose or financial statements, no need of following accounting standards. But we know that for tax purposes they prepare financial statement. Uh, of course, that's for partnership and private limited. So thereby, owners in general, owners you can put here, no problem. I think I answered your question. Okay, we'll see the answer. Here the answer means the way we our answer means that's how we have worded. Don't worry. Primary users, organizing managers, and the outside parties. Financial account. Organization managers. I think here primary users they have to organization managers not coming under. I think slight modification is required for this, no? Or organization managers and outside parties. But remember, organization managers are not coming under the primary users. Of course, if you look at the sole proprietorship and the partnership, they are managers, they are coming in that sense. That's right. But we are having this classification not for sole proprietor, but for listed companies, those who need those companies, entities which are required to prepare financial accounting. Types of reports: summary reports, of course financial statements are summary. Detailed reports. Frequency of reporting, less frequency, usually 1 year, 6 months, quarterly, likewise. But when you talk about management accounting, we need to provide reports, depending on the manager's requirements. A production manager may require cost information or whatever resource consumption information hourly. Each hour he needs something like that. So thereby marketing manager needs daily sales reports. Marketing manager needs daily sales in quantity, area wise, credit sales and debit sales, something like that, daily. So nature of information, of course, past oriented information, future oriented information. But remember, this is for just for classification. That's why we are putting in red. Whatever the information with the financial accounting and management accounting, remember, used for decision making. So thereby all the informations are future oriented. But Basically, you know, for financial accounting, we focus on historical, transaction and events already occurred. That's what we are meaning here. Regulatory impact subject to many regulations. Largely, there are no regulations. Type of financial reports we have basically, you know, uh, uh, two types of financial reports. Again, for this subject, this particular financial accounting course, we categorize general purpose financial reporting and the special purpose financial reporting. Cater to the user who are unable to demand financial reports, tailor to their specific information needs. The form and content are governed by the accounting standards and regulatory requirements. The regulatory general purpose financial statements, the general purpose financial reports or the statements we introduce, not for a specific group but for a group of people, common financial statement. But when you prepare special purpose financial statement, you prepare financial statement for a specific group. Maybe you prepare the financial statement for tax department. You may prepare the financial statement for a specific court order. If you are preparing the financial statement for a specific court order, or the tax department or regulatory agency or central bank, bankers may present certain detailed financial information if the central bank is asking to them. So then it will be special purpose finance. Intent for presentation to a limited group of users for a specific reason. Used in tax reports, bank reporting, and industry specific reporting. I think that's very clear. And remember, all accounting standards designed and presented, that including the conceptual framework for general purpose financial statement. That's the important point. General purpose financial statement. All the accounting standards we design and implement, and we propose whatever the things for general. But when you prepare the special purpose financial statement or the reports, you may use those standards. But remember, it is compulsory for you to use accounting standards when you prepare general purpose financial statements. Okay. General purpose financial reports there are different financial statements of profit and loss and other comprehensive income and income statements, financial performance results, statement of financial position, identify financial positions, cash flow, identify changes in financial position in terms of cash flow, statements of changes in equity, identify movements in equity. So basically, the purposes of reports are different. Income statement, basically the performance. Financial position is, of course, for the purpose of communicating the financial position. The cash flow is just to understand the changes in cash flow statement, net cash flow, and changes in equity statement is to the movements of your capital, movement of the capital. So I think you can remember when you prepare sole proprietorship. So you always do the movements. How do you do? Opening capital, you add back the capital introduced, and you reduce the drawing. Can you remember? The capital, profit for the year added, and reduce the drawing. That is the movement. But in a company, listed company, equity movement is a little bit complex. There are different kind of capital, equity. You have the stated capital, you have the reserve, you have different kind of reserve. And if you go to a bank, you have a statutory reserve. And you declare the dividend, listed companies, like drawings. So you issue the shares and you transfer, a certain amount of money in between the reserve. But in banks, profit will be transferred to the statutory reserve from the retained earnings. So thereby you may declare the bonus issue. So then you have to change the equity. So likewise, it reflect the equity, this thing. But just to understand, just to make you understand two things, when you have the financial results, that is profit and the cash flow, I would ask which statement, uh, which performance is uh, more reliable, profit figure or the cash flow figures? What is reliable? Any answer? Profit. Okay. One answer is cash flow. I think, you know, uh, even though profit is the cash flow also prepared under certain under SLF, under accounting standard, that's true. But when you prepare profit figure, profit includes cash and non-cash flow items. Today, if you make a credit sales of 100 rupees, if you calculate the profit today, even though you didn't get cash, you include that in your today's financial state. And if you use machinery, if per day machinery depreciation is 10 rupees, you include that also. If there are any liability provision, warranty sales, you may make a provision. So if you know that there is a possibility of incurring any future loss, future liability just because of today's event, you make the provision. So thereby, profit is both, cash and non-cash. And profit is calculated based on accrual gentleman. If the accrual is not applicable, you can't say it's profit. It's not accrual profit. So this gentleman, the cruel man, is not a good person. If you have power, you can dominate this accrual guy. You can use the cruel concept so as to understate the profit, overstate the profit. That is the power of accrual. So thereby, always profit is not a natural figure. Profit is a calculated one. It's a baby you develop. A profit is a kind of baby, not a natural one. It's a baby, artificial. You do it, you calculate, you develop profit. If you have more power, there's a tendency of manipulating the profit. There is a tendency of overstating the profit by making, understating depreciation, understating provisions. You got my point? On the other hand, if you want to make high profit, suppose you are going to make a share issue, in the prospectus financial statement, if you have the power means the people, the power, so they may overstate the profit by just overstating the stock. You can overstate the profit in this year. Rupiah taking by 2 rupees, you overstate the inventory. What happened? Closing stock will increase, but next year the issue is coming, but this year profit is overstated. So thereby profit is not a natural one. But if you look at the cash flow is, I would say, natural. You can't inflate the cash because cash is in your account balance, current account, FD, whatever the treasury bills. So those you cannot, the possibility of manipulating is very, very rare. I would say almost zero. So thereby, when you compare these two statements, performance, cash flow statement is more reliable than the performance report. But just to see the complete picture, of performance, you need the income statement profit to complete picture. Cash flow is not the complete picture, but it shows the ability of generating cash and cash flow, the liquidity portion. So thereby, that's why we include both profit statement or the income statement and the cash flow statement in our financial statement, just to balance the faithful representation and the relevance. So thereby, generally, for me, if I am looking at any financial statement, my first point is not to look at the profit. I will look at the cash flow statement. I will look at what are the cash flows from operating, what are the cash flows from investing, what are the cash flows from financing, and what is the net cash flow. And I will compare it with the previous years. Then I will go to the financial statements. So I think that's one thing I just want to highlight. And second one is, what do you mean by financial position? What is financial position? How do you interpret financial position? How do you interpret financial position? How do you interpret financial position? Yeah, financial position is, I have a little bit more. Yeah, yeah, we can. I think recording version you can get. You can listen again and again. So I will try to. Don't worry about this. Is the first lecture. I will try to deliver it in little bit in English also. I know that since you are first year student, newcomers, very difficult to understand the language, but I will try. It's anyway, it's good. I will do. But how you can improve the English is, you can't improve the English within one night. 10 days, 12 days, those are very myths. I think you at least you have to spend 2-3 years to study English. But just to improve your English, what you have to do is you have to read, write, listen, read, write, listen, read, write, listen. That is the mechanism. So at least you spend 2-3 hours. At least you have to spend 2-3 hours on listening, looking at grammatical patterns. When you read a sentence, look at the grammar pattern, the way, the pattern of writing. So those matters are learn new vocabularies. Listening is important to improve your English. I hope that since you have 4 years, you have enough time to study the English, but focus on that. Anyway, I have little time to complete, but I don't have much more time to explain, even though we have many things to discuss. Financial position, of course, shows the capacity of your business. That's the idea. Capacity. What is capacity? So you may express your capacity in your house. You say, we have 2 bedrooms and 1 the dining room and this and that and that. So that means you are talking about the capacity. So when you say 2 rooms or 10 perchers, we understand the capacity. So always capacity may express in terms of numbers. In business also, reporting entity, interested parties, the primary groups, lenders, investors are interested to know the capacity of the business. But in terms of rupees, we present the capacity. The total assets shows the capacity of the business. Total assets shows the capacity of business. And when you compare total assets with the liabilities, you get the net assets that shows the capacity of the business. When you compare the capacity of the business with the performance, you will get the clear picture. That is the purpose of financial statement. It shows the capacity of the business, but not in quantity, but in rupees, assets, liabilities, equity. Okay, coming back to regulatory impact. There's also one question: what is the regulatory impact? Regulatory impact in the sense that you know uh, 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 regulatory matters. What kind of impact? Impact means something like this. Impact is making on financial reporting. Company Act making an impact. Each company should prepare financial statements. That is the impact. Impact means kind of discipline. Impact means kind of control. Impact means kind of monitoring. So thereby regulatory matters impact. The crossing, what do you call this, pedestrian crossing, have an impact on us when we walk. But when we are not walking, when we are at home, it doesn't have any impact on us. When we drive, the driving rules, color lights will have an impact on us. You're going to find that means basically impact means a kind of discipline, kind of control, kind of monitoring we are going to exert on a particular segment. There was a question: what is the regulatory impact? Regulatory framework on financial reporting in Sri Lanka. You see that there are we have the Companies Act, Accounting Auditing Standard Acts, and sector specific acts, maybe Banking Act, maybe Insurance Act, etc. I think you are familiar with the Companies Act and the Accounting Standard Act, and also the sector specific act, of course, depending on the particular sector: banking sector, insurance sector, leasing sector, telecommunication sector, something like that. Accounting standards are there. Statutes, that means rules. I mean, these are the statutes, rules, laws. Accounting standards, of course, you have different standards. SLME standards, Sri Lanka Public Sector Accounting Standards, LKS and SLFRS for private sector, so something like that. Then the stock market regulation also there, CSC listing rules and CAs. If you look at the newspaper article, you see the quarterly financial statements published in the newspapers. පිටු භාගයක පිටුවක publish කරලා තියෙනවා CSC requirements for bank. Maybe just this is for banking sector, that is for leasing companies directives. Then the accounting standard, of course, principle that guide and standardize the financial accounting practices. Sri Lanka accounting standard have converged with the standard issued by the International Accounting Standard Boards. So we have the IAS. IAS means the old accounting standards, which was introduced under International Accounting Standards. We label as LKS. I think that is up to 2000. All the standards came already in the system, already in the accounting field up to 2000. LKS, the label. After 2000, new standards. We label it as SLFRS. SLFRS means Sri Lanka Financial Reporting Standard. All the new standards we introduce as SLFRS, old standard LKS. I think Accounting Standard Committee, you have the act. So there's a particular setting boards, Sri Lanka Accounting Standard Committee. They are responsible for developing accounting standard, and also there's a particular institution, Sri Lanka Accounting Auditing Standard Monitoring Board. We call it /MB, Sri Lanka Accounting Auditing Standard Monitoring Board. They are like a police. Police department is responsible to maintain and look after the civil law. Law and order is maintained by the police. Likewise, law relating to accounting standards maintained by this particular /MB. So thereby, it's like a police. They will look at whether the listed companies, whether the relevant entities are adopting accounting standards based on this accounting standard. If you know any company, listed company, any company which is responsible of following accounting standards, they have prepared financial statements without comply with those accounting standard, then you can make a complaint. Like you make a complaint to the police station, you can make a complaint to this/NB. Okay, and also there are certain rules. Company should send a report, one annual report to the SLA, this particular institution. Likewise, there are certain rules and regulations. Specific enterprise, these enterprises, I think I'm not going to discuss. These specific enterprises should discuss, should prepare financial statements as per the accounting standards. Companies listed in bank, insurance companies, factor companies, finance and leasing, and non-listed companies, annual turnover in excess of LKR is 5 million. Whatever the company, if exceed turnover of 500 million, they have to prepare the financial statement based on this, even though it's a sole proprietorship. That's the case. Non-listed companies, share, even government companies. So I think this is very clear. Then Companies Act, accounting records, there are sections, section 148, 149, and 150, 152. Due to keep accounting records, the place where accounting records are kept. Section, if you can download the Companies Act, you can read this section 148, 150, and due to duty to prepare financial statement 150 to 152 and 51 to 53 contain. But these are little bit, in summary form. But if you want to understand what contents to be included, you need to study the relevant accounting standard in details. But this is Company Act just guide you, direct you what to include in financial statement under 51 and 53. Are you clear? Sub areas. So thereby, for financial accounting, 148, 149, 50, 52, 51, 53 is important. And auditors, with regard to the auditing of financial statement, 154 and 169, and annual report shareholders, 169 and 169, 66 and 69 section is important. Is it clear? That's okay. What I will do is, I will stop at this point. We will continue the rest part. I'm sorry, because we had a little bit delay in starting the lecture. I know that you have another lecture. You need to join some other another lecture if there is. But I think rather than just doing it quickly, I think next term, next sessions, I think Dr. Anil will come for the lecture. He will continue with, I will ask him to continue with the where I stop. If you have any questions, I can just look at. Lecture in yeah, we will. I will come to that later. Okay. If you don't have any questions, I will wind up the lecture. Thank you very much for joining with us. We hope that continuously you will join with us the lecture. If you can't understand anything, you can just put a message. We will try to answer. Okay. Thank you. Thank you for being with us. I will wind up the lecture.